as part of our penultimate session. But like they say, it's not over until it's over. We will move on to our final fireside chat. But right before that, giving you a heads up that right after this, we will also be announcing who is that prize winner, the giveaway winner. Of course, you visited the booth, the partner booth of SIFI Technologies. So the name would come to yours truly just in a while, but for now, this is the time that we chart the course to profitability and the digital transformation of BFSI. We talk in a holistic way, especially I'm particularly intrigued how our speakers would also address the hesitancy of customers who are still resistant to digital banking adoption, and even more. But let us now invite and raise our awareness democracy to a new level by inviting our session moderator. First up, Jaikrishnan GK, Partner Advisory from PwC, who will be in conversation with an erudite personality. Let's also welcome Jigar Shah, the CFO from NSDL Payments, with a lovely, good round of applause. Ladies and gentlemen, we're getting up for a finer evening. Can we welcome them with a good round of cheer, please? We'll really appreciate that. Thank you. So we are ready to listen in as to what do you all take out, you both, from your arsenals.
Hello.
Thank you.
Hello. Thank you. Hello. Hi, Jigar. Welcome to the Fireside Chat. This is too late in the evening, and already we are a bit behind the schedule. There's dinner waiting, so let's try make it as fast as possible. The topic is about how banks can chart their way to profitability through digital transformation. Much has been talked about today evening about experience, security, the investments that are happening on the AI side. When we look at from a finance perspective, from an investor perspective, it's important that all these investments are paid back in returns. Therefore, we will start with what kind of investments are we seeing from a return perspective, the high return investments, and from a benefit standpoint, where banks are becoming more efficient through what kind of digital investment. Yeah.
Sure. Thanks, Jay, for asking this question. Firstly, good evening. I think the best part of keeping the last session is that we can run fast and get back to dinner, because everyone I can see is just stretching right now. But yeah, I'll just make it quick. What is happening now, I mean, this is a very important element. I've gone through the pattern and I've listened to all the eloquent speakers regarding the AI, the jargons, the ML, and so on and so forth. What has happened is that, the profitability is also an equal element when we look at from the finance angle. Yes, I deal with, the technology guys day in, day out, bringing in new technology. And what has happened is, as in when we consume more technology, we also have to look at the balancing part, which is the profitability part. So what essentially, what I can see, what is happening, especially with our bank and in general also, there are 3 layers of investment which is happening right now. The first layer of investment, what I see, is where the customer is. The customer is moving towards smartphones. We have more than 1 billion smartphones. So everyone is moving there where customer is. Now that's where the AI, the beauty part comes in. The people are predicting what customer wants to, what products we want to offer. That's where the investment is coming there. We do this, or many banks have done this, either through their own channel, which is the mobile application, which nowadays Internet of Things, or super apps, that what we call. There is a cross-pollination because, we talk about fintechs, we talk about the new age banks, we talk about banks. All of these are part of ecosystem. So the investments are done through these partnerships. The investments are done in the customer-driven environment. The second area of investment where what's happening right now in the last few years, with the more and more adoption of digital technology, that is a lot of regulatory requirements also comes in. So the second investments that's coming in right now is, because the number of frauds are going up, the ecosystem has to be more robust. That's where the second layer of investment is sort of putting in, and most of the banks are, focusing on this element, because as and when the reduction of the branch and the emphasis of digitalization goes in, because in India today, more than 40% of the payments are probably done digitally right now. So more investment is going through technology and through in the regulatory frameworks. And then lastly, I think many speakers and many panelists also have mentioned about, how efficient we use the AI and ML, which is still an evolving pattern for us, but into the operational part. Now, when I say operational part, this is the way we were doing banking probably 10 years back, through the customer service, through the cold callings, or through the call centers. This is where things are also changing, how we also use this mechanism or put investments and try to reduce the cost part and also increase the efficiency part and at the same time the customer experience. So I think these are the three layers where most of the investments are going right now. And this is where from the finance side also we look at it, because at the end of the day, there is an ROI on each investment. So that's what we track today.
So one of the things that you talked about is investing in priority areas, particularly on the customer acquisition side, etc. Earlier, I think whenever we used to talk about tech investment, you said tech guys coming with proposals, and it's always a conversation that we see between tech and finance and between tech and business, and nothing unusual about it. But is it true if I were to say it's till recently we used to put tech as a solution to our problems? Today, tech itself is a problem from a standpoint of looking at understanding where are we spending, where are we returning, getting money?
That's a classic trap question to a finance guy. But yeah, I mean, see, this is what it is. The technology is doing phenomenal job. And we keep, as I said, talking to our technology guys, the CTOs, as well as the business guys, to pump or put more investment into these areas. But at the end of the day, the question that comes is, where is the ROI? So I think it's more like a balancing act right now. How we are also evolving is that while we may say the AI and ML, and as somebody earlier also said that, when we are looking at the mass banking, and that's what the government of India or the regulator is planning to do, we work in a model of phygital sort of an era, where there is some amount of digital push, there is a lot of physical push, and that's where the blending happens. And that's where we look at, technology as some investment that is going to bring in the ROIs in probably 3 to 8 years of down the line. But this is where, the blend is going to be, and this is where the most of the discussions or the arguments or the debate with the tax guy comes in, that, give me more money, because we have to, the problem is that you have to front load the money, but the revenue on that will come after some time. That's where the battle goes, and I think it's a very healthy battle, and let that continue.
Yeah, and it's not just about bring the money faster. It's because time is money, right?
That is why most of the business guys or the tech guys don't like the finance guys, because we keep asking them, where is the money?
Yeah.
And I represent a payment industry, so it's even more difficult to earn a dime out of payments. So yeah, that's something that we change.
So we, coming from the consulting fraternity, we have a beautiful way of articulating it to CFOs, that you have a benefit realization framework. You align parameters, business objectives, build a business case, support every time investments with business case, and then track after the investment has been done if the business case is met. If it is not met, how do you do, etc. Can you throw some light in terms of what kind of parameters one can adopt when looking at tech investments? Of course, customer acquisition we've already talked about. From an efficiency standpoint, reduction of manpower standpoint, what are some parameters that we can consider?
So essentially what has happened is that in last few years, there is a B2B model that a lot of people operate. There is a B2B2C model also a lot of people operate. So essentially the parameters that we try to look at in terms of efficiency is that when we are operating with, let's say, a customer, so because we come from the payment side and we look at revenue per customer. So we have adopted or we have taken the leaf from the telecommunications industry. So we track, what is my average revenue per customer, so ARPU, because the payments are very granular in nature, the services are very granular in nature, and it becomes important to track at the ARPU level with this customer. It is difficult right now because most of the technology which goes in order to offer these services, it's hard to compute, but this is something at a high level that we track, that how much is the ARPU that we are able to generate out of these investments or out of these offerings given to the customer. At the same time, from the B2B side, what we do is that how much at a partner level, because that's the same old model that when you're offering, it's like a corporate banking. When you're having a partnership and you're investing in partner, that is what the metric that we follow. At a total level, what we look at is that this has to give some ROI to the bank at the end of a day. Each customer has to sort of pay in a way. Yes, there is a concept of Peter paying for Paul, but that goes at a larger level. But this is the general theme that we follow on the ground, that at the end of the day, the ARPU has to be net positive.
Excellent. So what we are hearing is keep the metrics simple, look at returns, and make best of the ecosystem. Do what is relevant now. Of course, we need to invest about for future, but that need to be guided and driven by a business case. There is a pressure on time, so we got to close it as the last part of the point. I would like if you could allude into what could be fast forwarding, maybe till 2030, 2034, with all the digital investments that are happening at institution side and at the environment ecosystem side. What is the future holding in terms of digital becoming a primary driver for profitability and creating more efficient banking organizations?
So I'll give you a simple example. I mean, a lot of people say that there's a huge opportunity. You know, a few years back, we were introduced or we were hit by a news called Kakao Bank, which is a South Korean digital bank. The population of South Korea is 51 million. Today, they are serving more than 25 to 30 million customers. Most half of the country they are serving. So this is what the digitalization can do. What essentially has happened in our country also from the physical format, in the last 10 years, there is a lot of investment has gone into a digital format. Now, when I say digital format, we have an India stack, which talks about Aadhaar, mobile. Then on that stack, what we have built is UPI. There is an OCAN, there is an ONDC, there is a CBDC, there is an account aggregator. I think all these investments that has been done in the last few years, it's going to come true. And that has to happen. And if that is going to happen, India is going to go digital in the next 10 years. You know, late Mr. Wagul, who was with ICICI, he had mentioned recently that, you know, in the next 10 years, he definitely sees that the banking space is truly going to be digital. And I think there is a lot of merit in that statement because all these investments that at an entity level, as an India level that we are doing in last many years, this is eventually going to fall, just the way UPI is getting fall. You see now UPI is getting leveraged for all sorts of product that we offer. UPI was started with payments, then the UPIs, you know, explode into various other elements, which is like an IPO, RASBA financing. UPI is now coming on credit. So UPI is going to be a core form factor while, you know, where we are going to move ahead. And that is also one of the reasons where we see UPI being exported to many countries. So I think in next 10 years, I see India growing from physical to, phygital, and from phygital to digital. That's what I can say.
Excellent. So on that note about what is digital vision for the banking industry, we'd call it an end for this session. Thank you all for your patient listening, and over to you, back to MC.
Thank you very much for listening to us. Thanks a lot.
Thank you very much, gentlemen. We'll just hold you for a couple of seconds for a picture there. And with that, yes, it's time to also announce the lucky draw winner, who would be presented an amazing goodie from Sifi Technology. So we are just there, after which I will render the most important word of the summit, which is thank you to you all. And post which, of course, we network over dinner and some happy smiles. But hold on. Thank you very much once again, the two of you.